Welcome back to 0.5%. This is episode 14, part 2. In this part, we'll be going over the trades I completed on April 9th. I've been sticking with just trading Nugget and Dust. For those who aren't familiar, Nugget is the Direxion Daily Gold Miners Index Bullish Leveraged ETF, and Dust is the inverse, bearish. So just mirror images of each other. When one's going up, one's going down. When the other's going up, the other one's going down. On the 9th, let's see, I completed 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 trades. My opinion, way too many. We'll see on the chart too how many of these I could have just held and probably made more money. But for one indicator or another, I decided to get out, sometimes with a win, sometimes with a loss. Looks like my best trade of the day was a 1.73% trade. Second best was a 1.31%. My two worst trades were negative 0.71%. And it looks like negative 0.34. So not too good on the stop loss for those. I'm still working on how to figure that out. There's been times where it's dropped a whole percent, but then come back up. And I think I just need to be looking at a different time frame to have a different perspective on whether I should have got out sooner, or no, this is respectfully in its range that it should be trading on a larger time frame, and maybe perhaps a time to double down. I did double down on a couple of these. The first one I doubled down on, that was my first biggest loss, 0.71. But the second one I doubled down on was my largest win, 1.73. So actually didn't get too much out of all that. If you look, the first one was a loss of $60. The second one was a gain of 155 for about the same amount of shares, just a 10 share difference. But that just goes to show you the significance of percentage negative versus positive. I was able to throw down the same amount of money the second time as I would have, or as I did the first time, even though I took a loss, because I'm not using my entire trading available capital per trade. I'm just doing it in smaller pieces. That's where I'm comfortable at trading. So for example, these trades were about 150 shares, throwing in about anywhere between $8,400 to almost $9,000. I'm not really comfortable trading more than that yet. But like I've said in the previous video, if you use all you have and you take a 50% loss, then you need 100% win just to get back to zero. So yeah, there's a lot of risk involved here, and I've taken some significant losses already. I'm really trying to be disciplined at the lessons that I've learned in these weekend researches and reviewing my trades. I think I am getting the hang of recognizing when's a good time, but maybe being a little impatient that, yeah, maybe it is the good time to get in, but let's wait another minute till it's confirmed. So I've thrown these on the charts. The first trade that I did for the day was with Dust. So I'll open up Dust. We can see there was this huge drop in the morning. I think, what was it? Yeah, so the 9th. Was that Thursday? I think so. So the whole market was up. Actually, I can pull up. Do I have it here? All right, well, I was going to pull up the market and just see what happened that day. Anyways, so dust opened up way lower, kind of the same mentality. I'm thinking, oh, this is a gap, it's got to be filled, and we'll see if it does. But so where I decided to get in, there was a little bit of room for run up, but if I can remember correctly, I'll walk you through what my mentality was. So we've already had this massive drop in the morning. I'm pretty sure I put this cap on here after this first run up to where it dropped. So like right there, I was like, there's got to be some resistance here. So I'm just hanging out in the morning, watching it, what it's doing, watching these moving averages slowly correct themselves, watch the deviation slowly correct itself. RSI is just hanging out in the middle. Even though there was a run up here and the price crossed over the 50, it's already at the top of its Bollinger Band. The moving averages are still under it, even though the 50 crossed. And this is at the same resistance level we already tested. So I wouldn't want to get in here until I saw a confirmation breakthrough. And that's exactly what I did around 10:49. So by about 10:45, the moving averages are starting to straighten themselves out. We're still below the 200, so I don't expect a run up to that and then a breakthrough. I expect at most for it to touch it. But all the other moving averages are in order. We got 10 above 20, above red, which is 50. So blue is 10, black is 20. Those are all in order. It's just this 200 that's a huge resistance above us. But if we come down to where I bought in, you can see we broke through on this candlestick and then started our next candlestick above it. So, and it also had body. You can see all these ones that just are little T's, little lines. There's no momentum through there and indicators saying, hey, something might be about to happen. So moving averages are in line. Right where I was getting in, the RSI is pretty strong. We saw these two back-to-back green volume candlesticks coming in. This one significantly larger than the previous two reds. MACD is positive, and we have 15 above 30. So I got in here, but my expectation was to get out quickly. I wasn't sure if it was going to go in the next two candlesticks all the way up to the 200 moving average. And keep in mind, even though these volume sticks are pretty convincing here, they don't show up immediate. And I don't know if that's just for me or just in general. It's usually like a minute or two after that I get to see that candlestick. So we got big body on this one, pushing the top, breaking through, finally went above it. I buy in. We got a second one, so I'm just hanging out. RSI is trending back up. It's starting to get a little overbought. Big gap in between here. And then right there, let's see, what was I sitting at? I'm pretty sure I was sitting at 1.31. I'm not trying to get greedy. That great way to start the day. $100 in approximately 3 minutes. So yeah, I'll take $100, 3 minutes. I'm out. And sure enough, it also, and there might have been another indicator there to me. It could have just been sitting in like one of these T-looking shapes and then just jumped up at the very end of the minute. And just because of that hesitation, I was like, we're not ready to push yet. We still got that 200 above us. And if you look, a lot more hesitation on the next minute, even more hesitation, and then bringing back down to the 10. This could have been a trick in my book. Like, we looking like we're getting a bounce off of the 10, and it did come up a little bit, but there's still that 200 that's now even closer. There's less room for it to run up here than there was back here. So that doesn't interest me as much as the first one did. And even though we've got the two back-to-back, the size of this sell-off here, these two barely meet up with it, and then we have more sell-off. And if you watch, the moving averages tangle themselves back up into reverse order, and now we're back blue, under black, under red, under purple. So after this trade, I switched over to the Nugget portfolio or ETF because it is the inverse. Now that it's going the other way, this is where I want to come. My first trade was at 11:15. This was definitely not ideal. So this is where I could have screwed myself and got caught in the chop. I'm pretty sure that's why I was trying to do a quick, this is a 3-minute trade. Let's see how the 1 minute looks. And maybe it was more convincing over there. That's 4.8. Every time I change candlestick size, it moves me back to the whatever today's date is. All right, so my first one was here. That's a bit more convincing on the 1 minute chart. This started here, so I was probably expecting a further run up. Maybe it came down some and I decided to buy in. I'm not sure what was the cost I got it at, but either way, here we've got a huge price jump above the 50. Blues crossing, blacks trending up. We're getting them in order: blue, black, red, purple. But again, I had made a nice little run up here. Something didn't feel right. Probably the hesitation. You can see that next cross coming in, and then it's starting to tic tac. It's not pushing the top of the Bollinger Band anymore. And let's see, where are we at? So I bought in here. Looking at the moving averages down here, those look pretty good. Pretty spaced though. And then right here is where I sold. You can see that previous red moving average deviation candlestick here. I had a feeling it was about to start coming back down. We just got these moving averages pushed over 50. They might want to test it again. Sure enough, they did. But then I caught the next breakthrough. So kind of the same mentality, waiting for those moving averages to get themselves in order: blue, black, red, purple. I did buy in here, and you can see, it's hard to tell with my mouse. So you see where my arrow's at. The wick above the candle was originally part of the body of the candle. So that looked really good to me. We're getting the price pushing up, the moving averages lined up. MACD is positive, 15 over 30. RSI is trending strong. But then it did start to chill a little bit. I think I must have bought it at the bottom though, which made this give me still just a tiny bit of profit at the moment. So I held it, then a little bit more profit. And once I started to see it coming back down, I got out with a little bit there, which turned out to be a 0.4. I say a little bit, still a $22, let's see, $22 made in 1, 2, 3, 4, 5 minutes. $22 in 5 minutes. Not bad. So kept my eye on it, and it kept going up, but the indicators weren't there, or at least to me, to stay in it. Maybe they are on the 3. So like you'll see, and this is where I got really chopped up. This is where I lost some money. I tried to put these arrows on there so where you could see. So you imagine this buy arrow I got at the top, and then this sell arrow I got at the bottom of it. So this was a loss, this was a loss, this was a loss. I probably bought at the top of this wick, thinking this was going to be the run up again. Blue above black above red, huge candlestick. And nope, then it came back down, and I panicked and I sold. I was like, it's not going to run. You know, when it runs, I want to see green candlesticks back to back to back to back. And I'm trying to get better at the stop loss. So you can see here too, a bunch of MACD crossovers, but they're positive, which should have indicated to me that it's just going to be going sideways. Unless it's trending down steep, a negative trending positive MACD just means it's going sideways. So anyways, I got lost in the chop here. Let's see, how did that go? I took a 0.18, my biggest one, a 0.34, and then a 0.09. Oh no, my second biggest one. And then one more. Then I took my biggest. So I had 4 in a row that did not work out. This one. No, let me see. I think I've got these out of order. So I've got the win with dust, and then the win with nugget, and then the next 4 after the win with nugget are losses. So let me zoom out. That was the first one. So then this was a loss, actually. I must have bought at the top of this wick and then sold at the bottom of this one. So this was a loss. This was a loss. This was a loss. This was a loss. Isn't that crazy? If I would have just stayed from my first time buying in to my last time selling out, I would have made money. But nope, decided to take 4 losses in between the opportunity to make money. It was too tight for me. Like, I'm not comfortable sitting there yet, especially on the 1 minute chart where things can be volatile. We've got the moving averages crossing over each other, and I know I just said that crossover, as long as it's still positive, means that it's just going to go sideways. And even with the little blips in here, a little blip there, a little blip between here, the price kept going up, and there was no need for me to sell. Just getting antsy and not seeing that run up, I was like, that's where I wanted to trade, is that steep run up, not this long, smooth part. I haven't figured out how to be comfortable through that time yet. Because, like, you imagine if you bought here and then you see the price drop below the 10 and the 20, and you even get a green on the bottom of the Bollinger Band, that could signify that it's just going to go from bottom of the Bollinger Band to the 10 to the bottom to the 10 to the bottom and start moving down. It didn't do that. Like, it could be excited through here and then slam. Like, it might be trading between the top and the bottom of its Bollinger Band, but that's not very common. I think ideally, I shouldn't have even wanted to hold it through here. I should have just never bought through here. And then something crazy happened. So this is where I started making money, but it was very difficult to manage emotions. So I saw this run up. It looks like we've got blue just barely on black, above red, above purple. Great. Nice candlestick in volume coming up. Great. Volume coming in. Great. RSI trending positively. Great. MACDs are positive and looking like they're about to cross over. But then the next minute, I don't know what news event it was or whatever, but it just slammed down. It was all the way down and then back up halfway, then all the way down, then back up to the top. You see there's even a little bit of wick at the top of this red candlestick here. And I was like, something's happening. As bad as I want to just get out, stay calm. And sure enough, the next minute, massive candlestick up. And you know what I actually did? You can see I bought in twice here. I bought here, and then once I saw that next candle shoot all the way up, come back down, shoot up some more, I was like, give me another one. And I sold on the next candlestick. That one was for 1.73, one of the largest that I did. So there's the 2 buys. I only got a 10 piece on that second one because I didn't know what was happening. But it looked good, so I was like, let me get a little 10. And I got out with my biggest trade there. And then I just kind of rode it up through here, but you can see the volatility. Look at these wicks on the end of the candlesticks. Look at the body of the candlesticks. I forget what was happening here, but there was a news event that things were, I guess, getting good. And I got another one there. I got another one there. And then I got another one within this same minute, like in seconds. Let's see. And then I took a loss there. So it's the one right before the loss. Let's see how quick that one was. First loss is here. I got a 0.59%. It's only $3.40, but it was within seconds. I didn't know what was happening with the chart. That's why I decided to get out. But I did hit the 0.5%, which kind of brings us back to, the plan. I've been meaning to update this, but we are getting to 20 minutes, so I think I'll pause it here. And I have to do a little bit of refining. I've learned a lot about trading in the last couple weeks, and a specific number like 0.5, I think, is going to be more of a metaphor than an actual, because there's going to be trades much greater, and then positively and negatively. So I've got a new perspective. I wanted to go over these trades and just highlight the importance of getting in when these moving averages are lined up, when the indicators are there. And if you want to experiment with a certain time period, just use less money. But thanks for watching, and I'll see you either in the next part or the next episode.